Bitcoin, the crash. No, not really. What this is a chart, and hang with me, guys, because I'm going to save you a lot of money here. And I'm not a financial advisor, but I want to take you back in time. Take 5 minutes and listen to this video. Those of you that are speculating in cryptocurrencies right now and are wondering what to do. Okay? If that's you, take a minute and listen up to somebody who has been through it before. Yeah, Louis been a day trader. Okay, I admit it. I only did it for a year and I made money doing it. But the year that I did it was before and after 2000. This is not a chart of Bitcoin, although it could very well be. And I know some people are experiencing some pain right now. And you're saying to yourselves, should I buy more? Should I sell? Should I sell half? I don't know what to do. Well, let me bring you back to the year 1999. Remember that song, We're Gonna Party Like It's 1999? And some of you guys have been around long enough to know this. I was susceptible to it as well. But in 1999, the world was basically all systems go. We were preparing for God knows what, Y2K. Anyway, it was the dot-com bubble. Al Gore invented the internet. And this is actually a chart of the NASDAQ for a custom period of time, which is 1998 through right around 2002. Well, this is the period of time that I day traded, and during this time, the NASDAQ was going wild with different dot coms, dot com this, dot com that, and it looked a lot like Bitcoin, okay? And what I was saying to all my friends, because I decided to do some day trading around this period, what I said to all my stodgy, old, codgerly friends was, why in the world are you invested in the Dow Jones, the Warren Buffett thing? Why are you invested in the Dow Jones, which was having a very lazy appreciation, while the NASDAQ was a rocket ship? Every day I was making money. I was getting in on IPOs. I was trading, different offerings daily, pulling my money out of the market most days. But the NASDAQ was on fire. What happened to the NASDAQ? Well, what often happens to bubbles, give you a preview of coming attractions. You guys, a lot of you guys weren't here, and I would strongly encourage anyone that has a lot of money in the cryptocurrency market to talk to somebody older than 25 years old and reassess your risk reward strategy. Because this is what happened to the NASDAQ in the year 2000. We hit right around NASDAQ 5,000 and the retracement started. Okay, and then we had a bounce back. What do they call that? Dead cat bounce. What happened here? Fell back, broke resistance, fell further. Lot of people were buying more. And you may recall this from the silver market as well, as a lot of people bought in at, silver at 30 and 28 and 25 and 26 and 21 and 20. Well, the pain was not over until every last penny had been wrung out of every speculator like me. But you know what? You know how I survived it? And I did survive it, and I went back to work after that because I realized that there ain't no free lunch, guys. Okay? You may be able to steal a little bit of money, you may be able to steal a lot of money, but eventually the chickens are going to come home to roost. All right, how did I avoid losing all my money? Because most of the people who were day trading continued to trade through this range. See, when we were up here, we didn't really know that we were headed down to a number so low that the staunchest conservative would vomit up their portfolio, and they did. What kept people safe as this crash was going on? And don't get me wrong, I am not saying that Bitcoin and cryptocurrencies are not going to rebound. They very well could rebound and they could keep going up. So what I am going to give you is something that stock traders use that, and I'm not a professional stock trader, but in this kind of volatility, which you all signed up for when you decided to speculate in cryptocurrencies, in this kind of speculation where you want to preserve your profits but not lose all your money, I suggest you look at something called a trailing stop. Okay, very common among traders is to set a number that is your bailout point. Now, in day trading, it used to be, say, 5 to 8%, was the maximum pain you could take on the loss on a position. So if you jumped in at the wrong point and you got down to minus 8%, that was it. You sold. And a lot of people had partners that would even force them to sell. Might be your wife, might be a buddy, people you're trading with. I used to have a lot of friends I traded with daily. And they would say, Louis, get out. And I would say, no, I'm sure it's going to come back. Because I was a pretty lousy day trader, even though I made money, because I just love to hang on. But what I had was a trailing stop. Now, in the case of day trading, that could be about 8% of your position, and therefore, if this drop here represented 8%, you sold, okay? You just sold. You didn't think. You take your emotions out of it, because an emotional trader is a loser, okay? 8% sold. What often happened after a sale is you had an opportunity to buy it back for less. If you did that, you reset your stop. But the thing that I want to show you right now is a very common sense way to institute a stop when the market is going up. So if cryptos do recover, and I'm not sure they will, but if they do, and this number keeps going back up, what you can institute is what's called a trailing stop. Now, you can't trade this on the market. I know cryptos aren't, there's no broker to call and whatnot. But if you've got a lot of money in cryptos, then you better be graphing this thing every day. And the way a trailing stop works, let me see if I can get you the definition here. Um, okay, I can't pull it up easily. But the way a trailing stop works is if you bought here, let's say that is, you guys can't even see this chart, can you? Anyway, let's say that you bought here and this was $100, okay? And you put a trailing stop for 90. Let's say, or in this example, 8%, it'd be $92. So let's say you put a trailing stop to where if this $100 purchase fell down to $91, it would sell. It would trigger a sell. And in this case, you'd do a manual sell. If this went down to $93, there'd be no sale. And if it started going back up again and it wound up at 110, a trailing stop will move the stop behind you. So if you're at 110 and you reinstitute, the $8 or so trailing stop, your new stop loss is 102. Bitcoin's 110, trailing stop now moved to 110. Bitcoin goes to 120, trailing stop at 112 or 111, the 8% rule. Now it starts to fall. Now it gets down, it triggers your 111 sell. You sell it. Okay, a trailing stop is always moving up as the price is moving up. But when it sells, or when you have to sell it, you sell it. You don't think twice, you don't call your girlfriend, you don't wonder how much money you lost, you just sell. Okay, if you don't have that kind of resolve, you don't belong anywhere near cryptocurrencies and speculation trading. All right? If it executes and you sell, now you wait. What do you wait for? Well, you wait for a bottom, but you have to understand how to read this stuff if you are waiting for a bottom. Bottoms usually do not occur kind of like this. Bottoms usually occur in a long, slow burn off where everybody loses their positions and then it goes back up. Sometimes there are flash crashes and you can possibly buy back at a bottom, but the point is you have the option to buy back in when it's considerably lower. Reset your stops, your trailing stop, and start over. Start over. If you get stopped out again with that trailing stop, wait. Wait for a reasonable bottom to get back in. This is a trailing stop. This will save you lots and lots of money. It did me, and I certainly hope that you will consider this if you're speculating in cryptos. I really like you guys, and I don't want to see you lose all your money, especially, for those of you that are taking money out of the silver or gold market, because you're really playing with fire here, guys. So don't hold on to the bottom, all right? Don't just hold on for dear life, hoping that it will come back. When you get this kind of a blow off and everybody sees it crashing, the sophisticated traders and the people manipulating the markets, if they can, are selling. What they're doing here, and I don't think this happens in crypto, but in the stock market, they have switched to short. When the indicators indicate the strength is low, they go short. And a lot of people made a fortune shorting the NASDAQ on the way down. That's how the traders stayed in business. I'm not terribly good at that. But if you can't employ a short in a crypto speculation, you best just stand off to the side and wait for the fireworks. Okay, I'm sure that you'll share your thoughts about this, but this is my gift to those of you that are speculating in cryptos. Louis out.